Today is Friday, the 27th of May, 2022, and this is Brian Shannon from AlphaTrends.net speaking. I hope you had a good week in the market. We finally had an up week, and it was a pretty big up week as well. You can see the S&P gained 6.5%, NASDAQ 7%. Across the board, we were up, with the exception of Bitcoin. So let's take a look at the charts and make some sense of it. Starting with the daily chart of the S&P, we can see that we did make it up beyond a lot of the levels that we've been looking at, that is the 20-day moving average, which is declining, the volume weighted average price off of this peak, and we're now going to look like it's ready to approach the volume weighted average price from that high that we saw in mid-March. That would bring this market up towards this 420-ish level. The important thing is it got it back above the prior low. So, a lot of key levels in this market. One, we tested the volume weighted average price from the COVID low finally, and that was a very successful test. As you can see, we undercut that briefly and then rallied quite strong from that level. It wasn't all straight up from there, though. It really, the beginning of this rally really came with the Federal Reserve and what they had said here on Wednesday. That was at this point. Prior to the Federal Reserve, I had put a tweet out saying that it looks like the sellers are exhausted in this market, and if it could get beyond this little band of resistance in the S&P 500, it looked like it could continue to rally higher. It's really amazing to me that a lot of people in the last day or two have been asking me, where do I sell short? And that's not the way that I ever look at the market. Just as I wasn't looking for the low at this level, I was looking at it as a potential area of support, and it ended up being that. But we wait for the evidence, and that evidence didn't really come till over here that the buyers had regained control. So we want to buy strength after the dip. We don't want to be the dip buyer. Now, in this case, it would have worked and would have worked well. However, that's not the way it typically is. There's nothing wrong with getting involved here and still holding. But what you don't want to do is throw your risk away and look to get rid of your positions too soon because it's at a perceived level of resistance, such as the 20-day moving average or the volume weighted average price off of this peak or the next volume weighted average price. There are some pros and cons to this market. First, anything that looked like a short sale coming into the last couple days has pretty much been destroyed from what I see, the charts that I look at. Second, we've got a lot of good stocks that are moving higher. On Thursday, prior to their moves, I had mentioned on Twitter ATEN at $14.88 per share. That's right there. The stock rallied from 14.88 to 15.78. That's a really nice percentage move, and it never ticked lower. I had also mentioned SWIR, and the price there was, what was the price? I had it written down here. Well, we can see the tweet actually right here, and you can see that it was at $20.84 per share. The tweet for ATN was right here at 14.88. So if you're not following me on Twitter, I think that you're missing out on a lot, especially the people who just look at the YouTube videos. Anyways, that was right over here, and that stock has had a very nice rally from there and never ticked lower. It did exactly what it was supposed to do as it broke higher. So the good news again is there's still good, strong stocks to choose from. You don't have to buy yesterday's garbage to make money in this market. Stay focused on the stocks where it makes sense. That is, the trends are higher and you can identify where your risk is. You could have made money on stocks that were in downtrends, but those are stocks that are just bounces. The cons to this market are, you look at the longer term chart, we're still in a primary downtrend, lower highs and lower lows. But we have a Fed that's, more, still looking to raise rates, maybe at a less aggressive pace than had originally been thought. But, when you start to analyze that stuff, the only thing that matters, as always, is price action. We saw that the high, which is called 480 in the S&P 500, then it came down to 415. That would be that's that not would be that's 65 points. If we take 65 points from here, basically we undercut the measured move just by a small amount, but the measured move was also in that same area. We also, of course, know that the 38.2% retracement came in right around that same area for the S&P 500. So it bounced where it was supposed to. But the fact is, we're still in a primary downtrend. When we have a declining 20, 30, and 40-week moving average, we still look at the market as guilty till proven innocent, and bounces should be treated as just that. They are bounces within a primary downtrend. The NASDAQ came all the way down to the volume-weighted average price from the 2018 low, and now it's heading back up towards the volume-weighted average price from the COVID. Let's see if that does, in fact, turn into resistance. It had been a prior place of support. That would still bring this market another 10 points higher or so. And when we look at the 15-minute time frame, where the Fed came out, that's where the rally began. Now, this market also, I had said in that same tweet on Wednesday, getting above these resistance levels is what could lead to a stronger bounce. And again, it's a bounce within a downtrend. By the way, I mentioned these, this type of video I do every single day for subscribers to Alpha Trends. And right now I have a sale. That sale expires on the 30th at midnight. So it's just a couple more days, and I won't be mentioning my subscription product again if you're tired of hearing about it. I really don't mention it very often, but I bring you ideas each and every day, not just for the market, but for the individual stocks as well, to identify the low risk, high probability trades. The Russell 2000 also bouncing. It made it past the volume weighted average price off of this peak. It made it up to the volume weighted average price from this peak right here. You can see it's just shy of that. It's also just shy of the volume weighted average price from the COVID low. Now in the Russell 2000, the volume weighted average price from the COVID low acted as support, and then we saw it kind of turn sideways. Now next week we'll find out if there is resistance there. It's a level of interest that has the potential to offer supply. We've also got a declining 20-day moving average bearing down on this market. But it bounced where it was supposed to, at the 50% retracement, at the prior band of resistance. It became support. Now we're getting a bounce. Enjoy the bounce. Quit looking for the next rollover. The next rollover will let us, there'll be plenty of opportunity to sell short. But meanwhile, most stocks, as I mentioned, that had looked like they were vulnerable, have bounced and kind of ruined the risk reward for a short sale. Semiconductors, same story. They're bouncing in a downtrend as well. They made it beyond the volume weighted average price from that March high, so that's a positive. They're up to the declining 50-day moving average. That's a potential negative. The declining, the direction of the 50-day moving average is more important than one or two closes above or below it, and it's still lower. But when we look at the 15-minute time frame, buyers are clearly in control. There's no reason to look to sell short. Buyers are, have been aggressive the last few days. Enjoy it. If you still are holding stocks that you bought in downtrends that are, coming back to a break-even point, look to get out. Don't make the same mistakes that you have before. If they're still in primary downtrends, view these rally opportunities as a gift. Nobody knows if we're going to head down to the $200 level. It seems that the path of least resistance is still lower on the weekly time frame. So maybe we see something like this, and then what? Then the next leg lower that brings us down. If that were to happen, how would you prepare for it? How would you, have your positions in your account? Would they be ready to get imploded again? Or if you're buying, some of this over the last few days, do you have a strategy to lock your gains in on the way up and avoid any downturn if it turns back lower? Biotechs are right up to where they were supposed to bounce. You can see that's the level that we've been talking about, this prior band of support. Right now, it's not resistance. It has the potential to become resistance. Prior resistance, prior support broken, tends to act as resistance. We have zero evidence that it is in fact resistance. We saw this market close right at the high of the day. It bounced from the volume weighted average price off of the Fed volatility where, basically we could call it the Federal Reserve ignition of this market. That's where we lifted off from. We tested that this morning and then rallied higher. There is zero evidence that this prior support is resistance. It might rally up all the way to the declining 200-day moving, 50-day moving average or the year-to-date VWAP. As we know, last rally got halted right at the trend line. That might become important again as well, that maybe it does this. And then, hey, you know what? Maybe it does turn around. It's had a big decline. Maybe it does something like this. But we'll have plenty of opportunity to still get involved in these stocks. And again, you don't have to be buying, the garbage for a bounce. There are still stocks like ATEN. This stock still has room to run. SWIR still has room to run. It doesn't mean it's still a good buy right here, but this is what I do for subscribers each and every day to alphatrends.net, is to find the low risk, high probability trades in the direction of the prevailing trend. Right now, the swing trade time frame trend is higher, and that's where we had also gotten involved in ALKS and today. EOLS is another one on the long side. GLNG is getting ready to go. GPRE. These are all stocks like Dow. We bought that one today. ADI is the leader in the semiconductors and looking like it has room to continue to move higher. So again, last mention of it, I've got a subscription sale. Please go to alphatrends.net. You get daily videos that sum up the market. You get daily stock pick video. You get a midday video that kind of reviews the overall of the market. Every other week, we have a live webinar for subscribers. There's 2 courses that are included in this. It's really a good deal. I would encourage you to check it out if you don't want to make the same mistakes you've been making all year.